Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you have joined us for our oil and gas conference. Our next live presentation is from OMV. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view the company's availability for one-on-one meetings by clicking Book Meeting in the top toolbar. At this point, I'm very pleased to welcome Oana Goje, Deputy Head of Investor Relations, and Oliver Rosenthal, Investor Relations Manager of OMV, which trades on the OTC markets under the symbol OMVKY and on the Vienna Stock Exchange under the symbol OMV. Welcome, Oana and Oliver.
Thank you very much, Greg. Thanks everybody for taking the time to join us today. It's the first time we are participating in the virtual conferences of OTC, so we are really looking forward to that. I'll dive in straight away to the presentation to explain you who is OMV, what is exciting about us. I think presentation should be around 20 minutes, and then we are happy to take questions from the audience. Who are we? Basically, we are an integrated oil, gas, and chemical company with three strong integrated pillars: chemicals, fuels and feedstock, and energy. Chemicals, here we produce base chemicals like ethylene, propylene, and polyolefins, as in polyethylene, polypropylene. Fuels and feedstock, we have a refining and marketing footprint, and in energy, we do exploration and production, and we market gas and sell power. As you see here, as an integrated company, we have growth areas in all the three pillars. In chemicals, we will talk about it a bit later, as we have signed a very significant transaction recently. In fuels and feedstock, we are aiming to grow in SAF and retail mobility and convenience and energy, gas production, geothermal energy, and renewable power. I think why do we like it so much, and why don't we focus on being an integrated company? As you see here on the left side, you have the operating result of the company in the last 6 years and the cash flow from operating activities. And you will see that, okay, of course, 2022, I think, was an exceptional year for all the oil and gas companies. But other than that, we are the results pretty stable, and cash flow from operating the operating activity is the same due to our integrated nature. What is our strategy in a nutshell? We continue and we aim to remain an integrated company in the three pillars that I mentioned, with a strong focus on value generation. And here we have four strategic direction with the aim, let's say, to have be net zero by 2050 in scope 1, 2, and 3. So first, we want to strengthen and expand chemicals portfolio. We just did by signing the transaction I mentioned earlier, to establish a leading position in the renewable and circular economy solutions, to become a leading European producer of renewable fuels, and to grow share of gas and low carbon solutions. These all are underpinned by cash flow generation and dividend policy, which is very competitive, and I'll say a few words about it later. I would like to, because I can imagine maybe a lot of you are not familiar with the company, would like to say a few words about each of the three pillars. So first of all would be chemicals. We produce olefins and polyolefins for the segments you see here on the left side. So consumer products, energy, mobility, infrastructure, and healthcare. We are #1 globally in producing polyolefins for high voltage cables. That is in the energy part. And we also have a lot of customers in mobility and infrastructure. For example, all those pipes and so on, which are made of plastic, but plastic with a special property. The polyolefins. We produce this kind of polyolefins as well as healthcare. What is special about the chemicals that we produce is that almost half of the sales volumes are specialty products. What are specialty products? They have superior properties, like, I don't know, exceptional purity. For example, I mentioned the high voltage cables. Those, in order to produce the polyolefins for them, we use this clean room technology, which means that you cannot have really dust, or that's very, very little accepted, because these cables, they go underground, and they are transporting energy for 50 years from now on. They are also, we are one of the, I mentioned that we are the leading supplier for wire and cables, and these specialty products, of course, being of a more premium nature in terms of quality, they also command a higher margin, and over the cycle, they are way more resilient in terms of earnings than commodities. We do have, so in terms of geographical footprint, we have operations in Europe, where we have naphtha crackers as well as more gas-based crackers. We have a shareholding in Borouge. And it's actually a joint venture with ADNOC, the Abu Dhabi National Oil Company in Middle East. And we also have a joint venture with Total in the US, where we are having a 50-50 collaboration on Baystar, where we recently have expanded into building a 1 million ton cracker, and we also finalized a 600 million ton polyethylene plant. So that would be, and here we have signed an agreement with ADNOC, a landmark agreement. I will give you the details a bit later, where we are basically combining our European footprint with their Middle Eastern footprint, and together we are also buying a Canadian company to form really one of the biggest players in the world in polyolefins. If we talk about the refining and marketing, here we have 3 refineries, Austria, Germany, Romania. And I think what's important to mention here, of course, we also having a very strong retail network. For a refinery to be really profitable is, to be utilized and to have really secure sales channels. And you will see on the left side, we have made a rough representation. You will see the entire circle is our refinery throughput, and 10 million of it, so which is more than half, it's going to what we call secure sales channels. That is retail. This is our retail network. Chemical feedstock, we are integrated with our chemical operations in Austria and Germany, and aviation, that is jet fuel, which goes directly via pipeline in Germany and Romania, in Austria, as well as is very close in Romania. I think it's very important. These channels are, retail is a very reliable channel in the sense the volumes, unless you have events like COVID or exceptional events, volumes are pretty much stable, and margin as well. Chemical feedstock, of course, that helps a lot. So you can optimize your refinery utilization. You can do gasoline or you can do chemical feedstock. And aviation is, of course, stable, or rather stable, except again, like in retail, exceptional events. So all these volumes, then you have a certain guarantee of the refinery utilization. We are really focusing on that. We also, of course, have other more green initiatives. We are also building an EV network, and we are also focusing on building sustainable aviation fuels capacities. We have taken an FID last year, and we plan some more in the next years, of course, looking also at the economic environment and seeing what's going on. And the third pillar is ENP, or exploration and production. Exploration and production, here we actually have three main categories. I only chose to represent one. So we have exploration and production. That's the traditional exploration and production, if I may say so. And here we are focused as regions in the north, so more Norway, around Norway, Austria and Romania. And south, it would be North Africa, and we also have some share in UAE. What's exciting here, for example, in Romania, we have a project, a gas project, Neptune Deep. Used to be an ExxonMobil share. We bought it some years ago. So now we are together with a Romanian gas company. So we are developing this project, 140 kBOE per day, to start up in 2027. And we are also doing some other exploration activities in the Black Sea around the Neptune Deep. In the north, so in Norway, basically here we are looking into high grading our portfolio. We are focused on gas. And in the south region here also we are looking into a stronger position in North Africa or in the Mediterranean, looking at various projects or collaboration. But besides exploration and production, we are also having gas marketing and power, and we also have low carbon business. And here I would like to mention geothermal energy. We are having a project in Vienna. So the Vienna city, of course, is very ambitious, would like to decarbonize by 2040, and geothermal energy plays an important role. Let's say the city itself is blessed with having thermal water underneath. So basically what we are doing now, together with the district heating network provider, we started our first drilling. So we would be drilling for not oil, but hot water, and then use that to basically heat the city. We have started the drilling at the end of last year, and we are really looking forward to that. It's a technology that, let's say, it has been known. It's not necessarily innovative, which ensures, let's say, the project. So there is no hurdle from this point of view. So this goes on, and it will be the first one in Austria. We also have another in geothermal. We have another cooperation with a Canadian company called Evor. They are doing an innovative geothermal energy, in the sense that they say, well, the cities, they don't need to be blessed with hot water, but we are gonna, just search for hot rocks. We infill the rocks with water, and then we make the hot water and we just distribute it in the cities. But this is an innovative technology, it's still to be proven commercially. Now, going back a little bit to the group and to the financials, here you see our targets for 2030. You will see we are quite ambitious in increasing our operating result, in increasing the cash flow from operating activities, which is the basis of our dividends, and to increase the clean CCS EPS. You will see from the cash flow, so quite some increase. A lot of it coming also from the green part is the chemical sector. We are also implementing a group-wide efficiency program because, well, there are turbulent times, and we want to be prepared. So we are aiming for a €500 million impact on euro of additional to the cash flow from operating activities compared to 2023. Generally, I mean, we are in a very good financial position. You see here, well, on the left side, you see the ratings that we have, but I think the more interesting part is on the right side. We are at the end of 2024, we are at 12% leverage ratio, so a very low leverage ratio. Let's say our ceiling is around 30%, so we are very comfortable financially. We are also, of course, investing. You see here some details. I will not go through all the details, but I think it's important to see that we are investing in all three segments with a 40 to 50% of projects is sustainable projects, quite balanced in between. So in chemicals, just to give you some examples, for example, in chemicals, we invest in recycling, chemical and mechanical recycling. In fuels and feedstock, we invest in renewable fuels, as I mentioned, SAF, and in energy, we invest in geothermal. We also invest in renewable power, but only in Romania, because that is the only one that we also have a gas power plant there. So it's a very nice integrated model there. And we also do potentially CCS in energy. I think what's important, and all the investors, when we talk about these kind of sustainable projects, usually we get the questions, well, how profitable they are. And what we have done, I think, in the oil and gas industry, recently has been quite a trend that, a lot of oil and gas companies have cut a lot of their sustainable projects. In our case, we have not really jumped on the wagon of investing a lot into sustainable projects, but we said, well, we will invest, but where it makes sense, where we do think that there are competitive advantages, and also where we get at least 10% return. You see there that the sustainable projects in all our segment are, they should have the IRR minimum 10%. If not, we do not invest. So we have been very careful in selecting in which projects we invest. Therefore, there is no need to happily impair anything at this point in time. We come now to the maybe more interesting part, which is the dividend policy. Here you have the dividend per share history in the last, I think we have here 10 years. Since 2022, we have introduced an additional dividend, variable dividend, which we don't do buybacks. Therefore, that's, let's say, our answer to the let's say, alternative of buyback. Maybe the other oil and gas companies are doing. And you have seen we have had a very competitive dividend yield in the last 3 years, ranging from 11% to 13%. And in the last 2 years, we have had our dividend yield stable. The rule also, the way we guide our dividends is, you see here that 20 to 30% of the cash flow from operating activities is distributed in dividends if the leverage ratio is below 30%. But as I have shown earlier, we were at the end of 2024 at 12%. So we are really significantly below that. I will just want to say a few words about the significant deal that we have signed together with ADNOC. We announced it on March 4th. Basically, putting together all these three companies that you see on the right side, we are going to create the fourth largest polyolefin player globally, with a highly competitive cost position. 70% of its production cost will be in cost advantage regions like Middle East, like Canada, like US, with best-in-class technical and innovation capabilities, with substantial EBITDA synergy potential, and also well-positioned to generate very attractive shareholders' returns. Here you have, I will not go through all the details, but you have basically a little bit of a flavor for each of the three companies that are basically coming together to form this new company called Borouge Group International. It's the Borealis, that's basically our European chemical footprint. Then we have Borouge, the one in the Middle East, and then we have Nova Chemicals, the company I mentioned in Canada. They are all commanding leading position in their regions. You see number 2 in polyolefins in Europe, or number 2 in Middle East, or number 5 polyolefin player in North America. You see here this position that I was mentioning. So the first two are Chinese companies, and you have ExxonMobil, and it would be Borouge Group International. So really a significant presence in the chemical business. Transaction has been signed in now on March 4th and will be closed in the beginning of 2026. This is when basically this company will come to life. And I think also what's important to mention, I wanted to just show you the 70%. On the left side, you have the average prices of in terms of feedstock. So you have the Middle East, Canada, in US. This we talk about ethane, and then naphtha in Europe and Asia. This is basically how the chemical prices and majority of the chemical production in Europe is based on naphtha. You will see there is a huge difference in feedstock costs. So we are currently having 60% of our production facilities are in Europe. And then we are going to change that into 70. So from 60%, we basically half it, and we go to 70% of our entire production will go in these cost advantage regions. What does it mean? So OMV basically will come together with ADNOC. We'll have a joint control of this new company. Part of the new company will be free float, around 10 to 12%. The rest will be split in two between OMV and ADNOC. And this new company also committed to an attractive dividend policy, or the two main shareholders agreed on that, with 90% of their income being distributed as dividend. So here we made a simulation with a total floor dividend. That means that, for example, this company floor dividend, the dividend that will flow into OMV will be $1 billion or 900 million euros. And then, of course, this is a potential. There is potential for more, depending on of course, the chemical environment, and depending on the this company has a lot of growth projects now. So we have done a pro forma calculation. So this Borouge Group International would have an EBITDA of $4.5 billion, and through the cycle is set to grow to around $7.5 billion. So there is a lot of potential growth, and of course this growth will also come with a dividend growth, because this is only a minimum floor. But I'll stop here. I promise to also have some time for Q&A. We are always, myself and Oliver, and the entire investor relations team, happy to receive your questions or to have one-on-ones if you have questions. But I see we have already some questions here.
Yes.
So what I will do now, I will ask Oliver to read the questions on your behalf, and then I will answer them.
Thanks, Joanna. So we have here one question. Impressive shareholder distributions. What can shareholders expect in 2025?
Yes, let's go back to the slide with so first of all, what we said is, we have signed this significant deal, but this deal, as it is closing only in the first quarter of 2026, this will not impact the dividends or the dividend policy of 2025. So 2025 will be based on the rules that you are seeing here, 20 to 30% of CFFO. And here, maybe just to say two words, we have it split in this progressive regular dividend and the additional variable dividend. The progressive regular dividend is, our aim is to grow it, or as you see here in the COVID time, we kept it flat. I think we were one of the few companies that were able to keep it flat. But of course, our aim is to have a progressive regular dividend and a variable dividend. I think the history speaks for itself. We are very ambitious. Shareholder returns are very important for the management. I cannot give you more details on that, but I think it's the important part is that we are ambitious and we aim for a high dividend yield.
Next question is next question is what are your growth drivers for the next 5 years?
That's a very good question as well. So first of all, chemicals, as I mentioned, basically all our chemicals will go into the new company, Borouge Group International, which is set to grow for a $4.5 billion EBITDA 2020 to 2024, average to more than 7 or around 7.5 through the cycle. So that's already this is underpinned by organic growth projects, which are almost finalized. So now it's going to basically benefit of all these projects coming online. Also efficiency programs and a certain market normalization. So that's one big bucket of growth that we see in chemicals. And it's not only dependent on the market, but we have growth projects, organic growth projects that are being finalized. Like, for example, we are finalizing now a 1.5 million ton cracker and polyethylene plant in Middle East. There is another plant, propylene in Europe being finalized, and also Canada, the Canadian company has also one project. So these projects will bring additional value no matter how the market looks like. So that's chemicals. Then we will have energy. In energy, I mentioned this very exciting project in Romania. It's a gas project with 140 kBOE per day, set to come online in 2027. We are doing the first drilling this year, and everything is on time and budget. And we are also doing these geothermal activities. And then in fuels and feedstock, here is more of a transformation story. So we will have SAF capacity, but more towards 2030. And we are, looking into optimizing the results and basically capturing all the benefits that we see in the transition.
Next question is also related to what are your milestones for 2025?
I think, one of, for sure, the biggest project that we have is the Borouge Group International. The closing will be or is expected to be in Q1 2026, but we do a lot of work in preparation for that. We have promised $500 million EBITDA synergy, so we are doing a lot of work to already prepare for that. So the moment the company comes online, we can already start implementing, as we said, that 75% of those synergies should come in the first 3 years. I think that's definitely the biggest lever or the biggest work that we have in 2025. Other than that, we have finalized recycling, a chemical recycling. We have a patented unique technology for chemical recycling. We have finalized the plant of 16,000 tons, and we are now looking into building a bigger one. We also secured some significant EU funding for that. And in energy, I think we will need to make a decision about the carbon capture projects. Continue. We said we are also looking into potentially M&A for some M&A in those regions that we are present, and continuing with our geothermal energy.
I don't see any further questions.
Okay. Well, I think if there are no further questions, then okay. We would thank you, Oliver and myself. We thank you very much. This is where you can contact us. Happy to hear from you. And thank you very much for taking the time to be with us today.
Thank you.